Here's an established long-term uptrend. More recently, there have been clear bearish candles shortly after a gap up. During these developments, the commodity channel index went over 100 and is now returning back under 100, as a row of red candles consistently closes lower. In addition, these bearish reversal developments happened while price was in contact with the upper boundary of Bollinger Bands. So multiple signs now point to the fill of the gap up, likely to be filled down to the zone defined by this large red candle with higher than average volume, near its opening and closing price, which also makes a more valid support zone by running through this previous downswing point. Due to the structure of this gap in the context of the larger uptrend, there's likely to be even stronger support where there's the intersection of this support zone with the midline of the Bollinger Bands. To demonstrate mean reversion with the Bollinger Bands, keeping an overall bullish stance by remaining in the upper half of the bands. Now we can mark the closing and high price of the bearish star candle at the recent peak, where price is likely to return with a bullish advantage due to the factors we just discussed. In the process, also forming a fairly well-defined range, centering around the gap. Now, because of the bullish advantage, it's not too surprising to see price go a bit higher than the previous downswing point. Though since there's only been one close over the Bollinger Bands, a bullish breakout is less likely. And now attention turns to how price behaves along the midline and the 87 range. Soon there's basically the kind of price action with 3 methods falling candle patterns, to finally put price in the lower half of the Bollinger Bands. Though in the medium to long-term context, the chart is still quite bullish as long as price remains above the defined support zone from 81 to 78, defined by the gap fill range, along with keeping contact with a lower Bollinger Band. Turning to the commodity channel index, we see an oversold indication with values going under -100 and now returning back towards the channel. This combined with the piercing candle pattern recently forming in the support area along the lower Bollinger Band points to the recent drop as only a short-term occurrence, as bullish sentiment strongly returns to clear over the recent horizontal range around the gap up and continue the longer-term uptrend. To learn more about the topics discussed in this video, along with other technical analysis methods, please stay tuned and check out the hundreds of instructional videos I've already made.